Subscribe to our channel and click on the bell button to receive important financial updates faster than anybody else.
Friends, welcome to another video on your channel Profit and Equities. If you like our content, please don't forget to hit the like button. Also subscribe to our channel, click on the bell button and choose all notifications to receive important financial updates from our channel at the earliest. In this video, we'll be talking about 10 small cap stocks from Rakesh Jhunjhunwala's stock portfolio for the year 2018. Please watch this video to know more. Now friends, as you progress through this video, the thing you will notice is there are some stocks which are loss making, but on the other hand, they are trading at fractions of their book value. Now this makes them a very interesting selection. Now the first stock on the list is Man Infra Construction Limited, which is available at 44.45 and the face value for this stock is 2. The symbol for it is MANINFRA. Now Man Infra Construction Limited is a construction company engaged in the business of civil construction. Now if you were to look at the 1-year chart, you would see that the stock has been on a continuous downtrend and has lost a lot of money for people who hold it. The market cap of the company is 1100.14 crores, which means that the company is a small cap one. The EPS of 2.98 translates into a very cheap price to earnings ratio of 14.92, which is much cheaper when compared with the industry PE of 27.58. The company is also available at a very reasonable price to book ratio of 1.45, which again makes the stock attractive. The debt to equity for this company is 0.6723, whereas the return on equity is 0.0991. Now, one other positive factor for this company is the dividend yield, and it's at 2.43%. The promoter holding is also stronger than average and is 63.35. The 52-week high is 74.60, whereas the 52-week low is 42.60. Now the second stock on the list is Geojit Financial Services Limited, which is available at rupees 73.70 and the face value for it is 1. The symbol for it is GEOJITFSL. Now Geojit Financial Services Limited, formerly Geojit BNP Paribas Financial Services Limited, is a retail financial services company. The company offers a portfolio of savings and investment solutions. Now if you were to look at it, this stock had a mixed ride. It rose for the first few months of the year, but since then has been on a continuous slide. This has really not made much money for their shareholders. The market cap of the company is 1753.10 crores, which again is a small cap stock. The EPS of 2.84 translates into a price to earnings ratio of 25.95, which again is much cheaper compared with the industry PE of 34.47. The book value of 19.46 translates into a price to book ratio of 3.79. Now the company is debt free and the return on equity is 0.1369. The dividend yield provided by the company is to the tune of 1.70%, whereas the promoter holding is also good at 62.12. The 52-week high is 147.05, whereas the 52-week low for the stock is 68.80. Now the third stock on the list is Anant Raj Limited, which is available at 39.35 and the face value for this stock is 2. The symbol for it is ANANTRAJ. Now Anant Raj Limited is a real estate company. The company is engaged in the business of construction and real estate development. The company is involved in real estate activities with either its own or leased property. Now again, this stock has been an underperformer and not much money has been created here. The market cap of the company is 1161.20 crores, which means that the stock is again a small cap one. The EPS of 1.45 translates into a price to earnings ratio of 27.14, which is largely in line with the industry PE of 27.58. The interesting fact and a very strong fact for this particular stock is that the book value of 141.35 translates into a price to book ratio of 0.28, which is a very attractive number. The debt to equity is 0.6341, whereas the return on equity is 0.0164. The company has a dividend yield of 0.61, whereas the promoter holding is again decent at 63.47. The 52-week high is 84.80, whereas the 52-week low is 37.40. Now the fourth stock on the list is Bill Care Limited, which is engaged in offering pharmaceutical packaging research solutions. The company's portfolio of products and services include articles of plastic and polymer, aluminium and aluminium products, and also global clinical services. Now this stock is available at 44.50 and the face value for it is 10. The symbol for it is BI. Now this also follows a similar pattern. This stock did nothing for about the half of the year, then had a huge spike, but again has significantly corrected. The market cap of the company is 104.78 crores, which means that this stock is a borderline stock between a small cap and a micro cap. The company is not yet profitable and hence the price to earnings ratio is not applicable here. The industry PE for this stock is 21.79, and if you were to look at it, the book value is 202.39, translating into a very attractive price to book ratio of 0.22. The debt to equity is very high and a very bad number at 5.3623, whereas the return on equity is minus 0.3974. The dividend yield is not applicable here as the company did not pay out any dividends, and the promoter holding is also a very disappointing number at 30.01. The 52-week high for the company is 91.65, whereas the 52-week low is 43. Now, Autoline Industries Limited is the fifth company on our list and is available at 64.45, and the face value for it is 10. The symbol for it is AUTOIND. Now, Autoline Industries Limited is an India-based company engaged in manufacturing sheet metal components, assemblies and sub-assemblies. The company operates through the segment of manufacturing of auto parts such as pressed sheet metal, auto components and assemblies, which is used in the manufacture of main product and in design engineering services. Now, this company is also on a similar pattern. It had risen till about the half of the year but has significantly corrected since then. The market cap of the company is 135.35 crores, which means that again it's a small cap one. The company is not yet profitable and the industry PE here is 33.90. The book value of 5.78 translates into a very expensive price to book ratio of 11.15. The debt to equity is also not a good number at 2.7731, whereas the return on equity is 0.0799. Now the promoter holding is also on the lower side at 32.36. Now the next company on the list is DBREALTY Limited, which is available at 41.90 and the face value for this stock is 10. The symbol for it is DBREALTY. Now DBREALTY Limited is a real estate development and construction company. The stock did nothing for about half of the year, had a huge spike then, but again it went on a significant downtrend. Now the market cap of the company is 1019.25 crores, which again makes it a small cap. The company is not yet profitable and the industry PE is 27.58. Now the interesting factor is this company is available at a price to book ratio of 0.36, which means that even though it's loss making, it's still cheap when compared to its assets. The company did not pay out any dividends and the promoter holding is a good figure at 62.32. Now IONEXCHANG India Limited is the next company on our list and is available at 405.35. The face value for it is 10 and the symbol for it is IONEXCHANG. Now IONEXCHANG India Limited is engaged in water and environment management business. The company offers products including ion exchange resins, water treatment plants and chemical additives. Now the 1 year chart shows that this company had a spike towards the middle of the year which ended by about the half of the year. Then it again spiked, but after that it again went into a consistent downtrend. The market cap of the company is 594.51 crores, which means that the company is a small cap one. The EPS of 32.56 translates into a price to earnings ratio of 12.45, which is much cheaper compared with the industry PE of 26.81. The book value of 234.24 translates into a reasonable price to book ratio of 1.73. The dividend yield here is 0.86, whereas the promoter holding is just a bit below average at 44.04. The 52-week high is 638, whereas the 52-week low is 392.40. Now the next company on the list is Mandhana Retail Ventures Limited, which is available at 63.70 and the face value for this stock is 10. The symbol for it is TMRVL. Now Mandhana Retail Ventures Limited is an India-based retail company. The company designs, manufactures and sells menswear, women's wear and accessories under the Being Human trademark. The 1 year chart shows that the stock initially was forming some sort of a rounding bottom formation but then went on a consistent downtrend. It has also lost a lot of money for its shareholders. The company is a small one, and with a market cap of 140.67, it can be classified as a small cap. The EPS of 4.09 translates into a reasonable price to earnings ratio of 15.57, which is much cheaper when compared with the industry PE of 141.05. The book value of 41.97 again translates into a reasonable price to book ratio of 1.52. The debt to equity is 0.2848, whereas the return on equity is 0.1436. The company did not pay out any dividends, and also the promoter holding is much below average at 37.75. The 52-week high for the stock is 188.30, whereas the 52-week low is 60.50. Now, Mandhana Retail Ventures manufactures and retails the products which come under the Being Human brand. Now, one big risk for this company is if anything comes out wrong on the legal front regarding Salman Khan. Now, the penultimate company on the list is Prozone Into Properties Limited, which is available at 37.85, and the face value for it is 2. The symbol for it is PROZONINTU. Now, Prozone Into Properties Limited is a retail and residential-led mixed-use real estate development company. Now, the company was on a beautiful uptrend till about the half of the year, but then had a savage fall. The market cap of the company is 577.60 crores, which means the company is a small cap one. Now, this company is available at a very expensive price to earnings ratio of 252.33, which is much more expensive when compared with the industry PE of 26.55. The company did not pay out any dividends, and the promoter holding for this stock is also on the lower side at 31.05. The 52-week high for the stock is 78.40, whereas the 52-week low is 33.80. Now, the last stock on the list is APTECHT Limited, and this is available at 252.40, and the face value for it is 10. The symbol for it is APTECHT. Now, APTECHT Limited is a global career education company. The company's business segments are categorized as individual training or retail and enterprise business or non-retail. Now, again, the chart follows a similar format that it rose for about half of the year, but since then has been on a slide. Now, the interesting factor about this company is, in this stock, Rakesh Jhunjhunwala himself is the promoter. The market cap of the company is 1006.91 crores, which again means it's a small cap one. Now, the company is available at a price to earnings ratio of 52.91, which appears expensive when viewed standalone, but when compared with the industry PE of 95.49, this appears to be on the cheaper side. The book value of 62.63 translates into a price to book ratio of 4.03. The return on equity is 0.1248, whereas the dividend yield for this stock is 1.19. The promoter holding for this stock is just about average at 49.30. Now, friends, having seen the stocks, please don't consider any of them to be recommendations on our part. Please go ahead and do your own research. This and all the other content that you see on our channel are intended to be just pieces of news. Thanks for watching, and if you have not yet subscribed to this channel, please consider doing so.